I would say that what's been going on in the market in the past 6 months is the transactions that are happening are necessity purchases, and people are just fed up with waiting to see what's going to happen and they need to get on with their life. Products that hardly ever come on the market have been holding their prices because the person who's buying them knows that they don't come up very frequently, and the chances are that they're going to hold on to them for a long period of time, and they're probably prepared to pay stronger pricing. It's been quite advantageous to be a cash buyer. So I think those cash buyers have had a good run at picking up properties of better value because they're offering certainty.
I saw a lot of activity. We saw a lot of activity. That activity over the 12-month period has tailed down, it's not as active as it was in the very beginning. What I've noticed, probably not in the last 12 months, but in the last 36 months, that people much prefer to buy ready-made product or product that's almost ready-made. So people will buy second-hand apartments or houses so long as they're in very good condition and don't need refurbishment. A huge amount of cash flowing in from America to England, pretty much at the top end of the market. In most cases, the very top end of the market. There's some household names who bought in prime central London, none of which I want to mention in front of the camera. You wouldn't have thought they'd buy in London. They'd buy in Los Angeles or Miami or New York, or maybe they buy a house in the south of France, but not necessarily in London. They are buying in London.
Well, the weird thing is we've actually been busier transactionally than we have been in some years before. And I think the reason for that is because a lot of our landlords out of our portfolio are exiting the market. They have found that all the taxes for private landlords have gone against them. They now have to pay their income tax before paying the interest on their mortgages. So if they've got a mortgage, they are having to get out of the market because they can't afford it anymore. It's not really so much the fact that interest rates have risen. It's more, which they have, it's more the fact that they can't offset it against the income before tax, which is preventing them to run it like a normal business. We've also got overseas landlords, quite a few, and they look around the world, they think, why on earth am I here invested in the UK? I've had no gain on my asset value in the last 8, 9, 10 years in prime central London, which is the case. There has been zero gain. In fact, it's gone down in the last couple of years with the interest rate hikes. So they're looking at it. Their capital gains tax is benchmarked to 2015, so they actually don't have any capital gains tax, and they decide that they're going to take that cash element in their property and put it off in some other investment elsewhere that's going to get them a better return.
There seems to be like two camps. On one camp, we have the buyers. We are seeing a big influx of buyers who are very concerned with labor coming into power, labor increasing and putting a lot of taxes into properties, and taxation on capital gains as well. And that means that some people are now rushing to try to see if they can sell before any of that happens. And then we have buyers that whenever there is an election, they go like, woo, let's see, let's wait, let's see what happens. And I would say there is also a mini subsection of people who are like, oh, there are some people out there that needs to sell or wants to sell. Let's try to see if we can get a deal. The deal seekers are out there in force.
I think we have seen the market change to people really wanting to buy something that they can move into straight away. I mean, cash rich, time poor. Because the associated buying costs are so high now, people are sort of not really prepared to wait another 18 months, 2 years to move into the house that they bought, house or flat. Nationalities of buyers are still very varied in London. We're actually seeing some more Americans in the marketplace at the moment. That could be because of what's perhaps happening on the other side of the pond at the moment, who knows. But we are seeing more Americans in the UK market, which is interesting because they did leave for a while. Family market is still very much active and they are looking for good-sized properties and houses, predominantly 4 bedrooms plus. Same goes with flats. Pied-à-terre market isn't as active as it has been in the past. Again, because of the associated buying costs and the taxation that comes with that.
Patchy is the word I would use. Some weeks we're incredibly busy and other weeks, it's a sort of a slight case of tumbleweed and we have to be incredibly proactive. This last 2 months, I would say, has been really good for us, getting a lot of property under offer, which is hugely encouraging. Generally, the market seemed very slow on the first time of the year. Of course, there were some agents getting things under offer, but, on a day-to-day out viewing with other agents in Mayfair, Belgravia, Chelsea, that was, for me anyway, the word on the street. People were really sort of head against the wall, pedaling hard, but not really seeing much reward. Stock levels, I would say, are very good at the moment. But, ultimately new applicants registering, is down. And although the viewing levels are high at the moment, in terms of actually getting offers, and good offers at that, is actually down. So I think it's about 5% less registrations in sort of May into June than there were last year, as an example, which doesn't sound like a lot, but in that prime central market, it very much adds up.
I'd say the last 12 months have been patchy. There's no immediate pattern. Sales have taken place, but without any rhyme or reason. There is no trend, i.e. a particular nationality buying or not buying. Sentiments are calm. The election is being long forecast, so people know about that. The hope of interest rates coming down as inflation goes down is a positive backdrop, subplot to the story. So I think people are still buying. It's a very price-sensitive market. So you can't just ask for what you want.
I think that the imminent elections, are going to have an effect on the activity. People are just naturally going to wait. We've got the summer holidays coming on, and traditionally people don't really focus on property, especially when school holidays start. And I think these two things might see the summer market be quiet. If we are lucky, what might happen is when the Middle Eastern buyers come into town, which they tend to do in the summer, they will be a bit more focused on this kind of impulse, non-necessity purchase that they have at the back of their mind about buying in London, because the market is really, I think, at its bottom. I can't imagine that it's going to get any more favourable for a buyer. So I think those buyers in the summer may grab the opportunities and actually transact.
I think there's going to be a very slow market between the day after the election in November. I think people are going to wait and hear what the Labour government have in store for us in terms of their manifesto and in terms of what they might impose on high net worth individuals, whether it be a wealth tax, whether it'll be anything to do with SDLT, I don't know. But I think people will be waiting. And God forbid that Labour impose more restrictions on non-doms or the like of non-doms, the worse it is for us, the worse it'll be for us. Again, remember how good London and the UK were as a tax haven. And guess what? We're nowhere near 10th place, let alone first place anymore.
My prediction is that the Labour Party will win a very, very large majority and that the Tory Party will be in a complete and utter mess. So one of the things that might happen with Labour coming in is that the Renters' Revenge Bill, as I call it, it was known as the Renters' Reform Bill. I also think that Labour will bring in all sorts of other taxes, which will not actually generate the growth that they want to create. But I go back to the historical thing, which may or may not be the case going forward, is that actually under Labour governments, because people don't want to invest in business, they do have a tendency to invest in property as a safe as houses type approach. If you look back at Labour governments, the inflation in property value has been greater under Labour governments than under Tory governments. So it could be that that would be a factor as well.
It's extremely difficult to say because, the elections certainly have not back in early in the year, we all thought, oh, we have the whole year, election will be at the end of the year, it's going to be a good year. But now that the elections are here, and as I say, it has certainly quietened some of that momentum that was there, and God knows what is going to happen. I mean, to be honest, none of these manifestos make much sense. One promises the earth and the moon and the stars, and the other says not much, other than we're going to tax you, but we are not telling you what the taxes are yet, because just in case maybe if you really knew what the taxes were, you are not going to vote for us.
Do you know, I don't think there's going to be much of a change. I think it's more of the same. I think, what we're looking at ahead of us on the 4th of July, whoever is returned to number 10, I think we'll just see more of the same. Taxation is always going to be an issue. The non-dom taxation has been brewing for a while. I think that we will see... I don't think we'll see any major changes in property taxes. I don't think we'll see any changes in stamp duty, although I have my own feelings on how that should be amended or changed or done away with altogether. But it's such a low down thing on the list of things to do. That's not going to happen. So I think we'll just see the market continuing as it has done over the last 12, 18 months.
I think that the agents who don't rest on their laurels and work very hard are going to see reward, but I think that there is a big change in trend at the moment, and maybe the agents who have been around for a long time have had their success and perhaps have, dare I say, got a little sleepy. It's not going to benefit them at all at the moment, and I think proactiveness and buyers are like gold dust at the moment. It seems a bit cliche, but if you have a good buyer, you need to make sure that you've shown them everything on the market. Whatever happens and whatever the effects, we can work with those when they come. But for now, we are having buyers who are saying, I'm just going to hold fire, or maybe vendors that want to come to the market, but they're reticent to do so until they have a clear plan. But I think it's sort of asking people realistically, whatever the result of what happens in the election, are you going to not buy in London? And most of them will go, well, I probably still will. So it's kind of saying, well, actually, if you're in a position, mainly sort of, let's say you're a cash buyer and you have the facilities to move quickly, I think actually you're better to jump on it now, secure something that you love, have potentially a short completion before the elections, and, be done with it.
For the moment, there is not great unrest. Deals are being agreed, and interestingly enough, people exchanging contracts regardless of the election. Now, I would have thought, I've traversed 4 recessions, and I would have thought that buyers would hold off until after the election. A lot of people feel that actually the Labour policies, by their own admission, would not be vastly different to the Tory policies. They are much more composed, neutered. The policies will not be a lot different. And I think that's calming people's sentiments, which is not a bad thing.
What's happening in the rental market was really written on the cards, because all the changes that they made to landlords' ability to hold on to their rental portfolios, especially as individuals, has been put under a lot of stress. And I think, unless you're really dedicated to the business, then all the accidental landlords, which actually did make up a big majority of the market, have decided to retire. We're seeing a little bit more supply because the sales market is not acting like sellers would like it to. So those people are shifting over to the sales market while they wait. So the tenants temporarily have a bit of breathing space with regards to how much they have to pay for a property. I think that the pressures on the rental market will continue, and I think that people will have to revisit whether they live in prime central London if they want to rent, or whether they need to start thinking about moving to some of the sort of more peripheral areas where these kind of built to rent developers are actually providing housing.
I see that prices, with undulations, will continue to rise on the rental market. I don't see the supply side there at the moment. I think one of the interesting things will be how quickly will the Labour Party bring in an increased capital gains tax, if they do. And if they trail it and say, well, we're going to bring it in 6 months' time, 9 months' time, a year's time, that would probably be the clever thing to do from the Treasury's point of view. Then a whole raft of people would sell up whilst CGT was still at 24% or whatever it is. When Labour come in straight away, they might rise it to 28 again. In the knowledge that it's going to go up to 40%, they'll get out. So that could bring in money to the Treasury. I'm not suggesting it is a good idea, but that could raise more capital for the Treasury. So we've got a real issue, particularly in central London, with supply side, and I don't see it being resolved.
Yes, it's not as hot as it was 2 years ago, but it's still, there is no doubt the rental market is booming. There is a lot of demand for properties. The prices continue to be high, although again, not as high as they were, but still lots of demand. You know, there is a little moment here that if you are savvy and you do your research, your research and due diligence, you can buy some properties that are very good for buy to let, particularly the one beds. Those are the beds.
It's definitely tailed off slightly. I mean, the summer market is notoriously always pretty much busy for rentals. But, you know, as you well know, the last sort of year really has just been pretty bonkers. And we've been seeing huge increases in rental prices, you know, up to sort of 20%, whether that be long let or short let, a huge demand. And with sort of supply and demand, as we know, with sales at the moment, there is less demand, but huge amounts of supply. Therefore, prices are coming down. You know, stuff that is, again, overpriced has been sat there, but stuff presented at the right price, you know, they've had competing bids and things have been going on, you know, long term with, you know, hardly a break clause in there. But I think it'll be sort of fairly stable for the rest of the summer, and then we might see a drop off sort of end of September, as we often do coming to that winter market.
Governments would do well not to interfere in the dynamics of markets, particularly the rental market. What has happened is the Tory party have taken away a lot of the fiscal benefits of renting. Buy-to-let investors are becoming a rare breed today. So a lot of them have sold out because with the higher cost of borrowing, a lot of their investments, their rental investments, no longer work. Consequently, landlords sold out to de-gear and reduce their borrowings. The number of tenants have increased because, prospective tenants, because the cost of borrowing have gone up and the gap between what they can afford as a deposit and what they need to pay has widened. Therefore, they have to rent for longer. So consequently, there are more, these people would have bought, but they can't buy. So the demand is greater, the supply is reduced, and rental values have gone up.
So the non-dom status is an interesting one because, again, it's something that is having an impact a lot on people's decision-making. Some of the people who are reacting and leaving are people who were potentially coming to the end of their non-dom status anyways. Hopefully what the new government will do is say, okay, the people who are here can finish their non-dom status, and anybody coming with new wealth will have a different criteria. And I think they need to think about very, very carefully if they're going to introduce inheritance tax to people who are not from the UK, who didn't make their wealth in the UK, and who are planning to be here for a lifestyle decision, whether it's educating their kids, whether it's something that they're doing for work. And I think that they need to think about this really fairly, because you're affecting a small number of people, but you're having a massive impact on the sentiment of what people think about coming to the UK.
Now that it's clear that Labour are going to win, they're going to go even tighter on non-doms. We had a fellow pull out of a purchase on something, so straight away, just like that. So yes, it has had an effect. I know a shrink who works at the very, very high end of the market with a lot of non-doms, and her point is that actually all her clients have or are leaving the country. And it's not even so much, I don't think, about the non-dom bit, albeit I think that's important to give people the status to be able to work here without taxing them on their work and live here without taxing them on all their overseas income. I just think that's unfair. And so it drives those people away. But just about everything else that this government that we're in now, or just exiting, and Labour are suggesting, will drive away further investment.
The reality is the non-doms have had a huge impact on our prime central London markets. There are two types of non-doms. There are the non-doms that came here to work. I was one myself. When I came, I'm working in a bank, most banking people were non-doms. And, many of them stayed and are here and they pay their taxes and so on. And if they have to continue being here because that's where their job is, well, they will carry on. But these are not the non-doms we are really talking about. We are talking about the non-doms who are like, really ultra high net worth individuals. Most of them, they are not going to stay because of the changes to the inheritance tax. And, all these assumptions that they say about schools, justice system, they don't care. The reality is there are many good schools in many other countries these days. And, when you have a lot of money, your children doesn't need to go to any particular school. Why are they going to pay taxes on their money abroad? Here. It makes no sense.
There is always a knee-jerk reaction. We had this some years ago, if you remember, when there was this double jeopardy of taxation. And we had a lot of people who decided they're going to go and live in Switzerland, especially in the banking community. They all ran off and then came back about 2-3 years later with their tails between their legs, finding that actually property was more expensive then. So knee-jerk reaction, but I think when people sit down and actually think about it, there's still a lot to hold people in London, just life in London is so nice.
I think that a lot of people that were looking to buy are potentially now going to look to rent just to sort of see what the situation is going to be. But sadly, the UK government is not making it easy for us and for, very wealthy foreigners who are coming over to hopefully benefit us as a nation. It's not attractive. Monaco, Italy, there's a lot of other places now where it makes a lot more sense to reside as a sort of a resident and then have your main residence somewhere else. It's just going to push that wealth out of town, and that affects stamp duty. It affects spending, in a general sense, restaurants, boutique shops, all of this, and whether that's going to help the UK economy. Personally, I can see why people have potentially an issue with it, feeling like why should they not pay this tax? But at the same time, if we look at it in a different angle, I think it's detrimental perhaps, for us as property people for sure. But it has sort of wider implications on that, I think, which is going to be interesting to see what, unfolds over the coming weeks, months, years as that does get phased out.
That's not good news. We're in the post-Brexit era. We should be encouraging people to invest here. We should be dropping corporation tax. We should be allowing non-doms here. We should be getting rid of enabling the VAT reclaim. If people can get over themselves and look at the big picture instead of the small petty politics picture, they will see that actually non-doms bring a lot of wealth to this country. They employ people. If they're here, they start businesses here. They employ, they take risks, they pour capital, they raise taxes of their own, and the country is better off for them.